What's up, everybody? Ricky Analog here with TrueTrader, back for another Sunday prep. I know I was MIA last week. I was out in Vegas for the Traders for a Cause event. Shout out to them for putting on such an amazing event, as always. I was invited back this year to give a speech. This year's topic for me was things you should be doing to ensure not only that you survive in the markets, but that you thrive. The key takeaways were: find a mentor, and then find another and another, because you're going to have a lot of mentors. Add value. Always be adding value. Find a tribe, but make sure your tribe is composed of positive people that will pick you up when you fall down, and they're not a bunch of yes men. You don't want to live in an echo chamber. Block out the outside noise. Constantly evolve, refine your process. And lastly, prioritize the mental aspects of trading. So that was what I gave a talk on, but there were so many key takeaways from so many great traders. Everything from systematic sizing all the way to things that certain prop firms are doing that are just generating amazing results. So a few of the key takeaways for me: one of my good friends and an amazing trader with a great track record as well, Joseph Fahmy, he gave a speech where he emphasized the importance of having a grateful mindset. So at first you might be like, why is that so important for trading? But the more you think about that and peel it apart, the more it becomes apparent why it's so important, right? You'll always hear me preach the gratitude is the attitude concept. And it's all about the fact that you cannot be grateful and angry at the same time. I honestly dare you to try. It's absolutely impossible. And trading is such a mental game that we have to do everything in our power to make sure that our mindset is always in the right frame of mind, right? So one of the things we can do when we get a bit off kilt is to always recenter ourselves in gratefulness. And trust me, you have a ton to be grateful for. Imagine doing what we do for a living and not being able to find things that you should be grateful for. Come on, guys. Another one of the key takeaways was by Nathan Michaud over at IU. He said, surround yourself with really good losers. And I laugh at it, but it's so true. And it's one of the things I feel I do very well. I trade 3 times a week live streaming for the community. And it's not always fun to eat losses publicly, right, in front of the whole community, but it's what is necessary. That's what keeps traders profitable. It's not the ability to have these crazy big winners, it's the ability to not have these giant drawdowns. So those are 2 of the major takeaways for me from that event. If you want to watch all of the speeches in their entirety, head over to, I believe it's impact.tradersforacause.org, and for an annual donation, which all the money goes to cancer research, which is a great cause, you can have access to not only the speeches from this year, but from all past events as well. Next up on the notes is make sure you set your clocks for a reminder that this Thursday is the next installment of Method and Mindset with me and the Wall Street coach Kim Ann Curtin. It's always at 5 p.m. on Thursday, that's Eastern time, so 2 p.m. if you're on the West Coast, and it's at TrueTrader.net's Instagram channel. In the meanwhile, head over to methodandmindset.com. We got hours and hours and hours of free content, webinars from both the mental side and the technical side, and like I said, it's absolutely free, so why wouldn't you? Make sure you like, subscribe, turn on notifications to our YouTube channel so you're not missing out on new content we're putting out. Thankfully, Goose has been carrying the torch for me while I missed last week's Sunday prep and put out another amazing midweek watch. Those are things you really, really don't want to miss, guys, especially when you're getting insights from a guy who has 25 plus years in the business, and he also has worked as a market maker, right? So he's seen both sides. Give yourself every chance at survival in this game, guys, and that means using your resources. These are free resources and they're powerful, so make sure you're doing that. That's it, guys. Let's get right into the disclaimer and then we'll hit up the prep. As always, guys, TrueTrader nor its representatives, including me, are not registered as security broker dealers. I'm not an investment advisor. Make sure you understand that nothing I talk about is a solicitation to buy or sell any stock. Trading is risky. You must assume those risks. Everything I talk about today is just for entertainment purposes. Let's get into it. So we've officially started off the earnings season. Remember that my Sunday prep ideas are not including the earnings stuff, guys. So if you want to remember how to, or you want to learn how to prepare for upcoming earnings reports, remember I did last quarter, I did a webinar on how to prepare for earnings. And the link will be in the description of the video. And so every idea that I'm going to put out today is going to be non-earnings related, but there's a ton of names reporting this week as well as the following week. So it would be a great time to, even if you've already watched that video, to go re-familiarize yourself with those concepts. So we always start with the broader market. Here we have the ES. One thing I want to start with, guys, is I'm going to start doing this for the Sunday preps, is starting at the higher time frames and just working our way back, right? The monthly, guys, yes, we are still extended. And if you remember what I had said 2 weeks ago when we talked about it, is best case scenario, right, for me is kind of have a narrow range, like have some stuff kind of start to compress and build a base, and then, you know, we can either try to push for highs again or we'll roll over. Either way, I would have plans for both scenarios. Instead, we're just right back at highs, right? I mean, in an amazing market, it's just nonstop. The one thing to note, guys, is as this kind of, even if we don't take out highs and go higher, you know, if we have pullbacks and we start holding support, as the months pass, right, this monthly 20 SMA is going to catch up. And the more it catches up, the less and less we are extended on that time frame, and the less downside I really see in any sort of correction. You know, any type of correction that does give a valid short signal, for me personally, will always have that 20 SMA on the extended time frame as its first target. So as that comes up, you know, the downside kind of diminishes. So let's move on in a little bit closer and we'll look at the weekly, guys. So obviously, you know, we pulled, like I said 2 weeks ago, right, I don't care about the pullback or the correction, whatever you want to call it. It's what happens after. And so we've had the pullback. We pulled back down to the weekly 20 and we have found buyers. We are all the way back, at least for the S&P, right? We're all the way back at all-time highs. Now, we haven't broken above them with any sort of conviction yet. So I'm not, you know, I'm not writing off any sort of chance that we do end up rolling over and taking out these lows. But I'm not, you know, it's far away from happening at the moment, right? A lot more stuff has to happen for that to even be in play at the moment. But let's zoom in a little closer and you'll see what I see on the daily chart is that even though we've pushed all the way up into the all-time highs, we're a bit extended, right? We do have quite a bit of room back to the 20-day. Now, granted, we did have a beautiful long trigger here. You know, we pulled back, we pushed up, made an intermediate high, higher low, and we broke, and it took us straight to the target, which is expected. That's what should happen when we get these kinds of setups. The other possibility is that triggers like that, and we don't make highs, and we roll back over, and that creates the big short trigger. But again, we're back at the highs. I'm kind of waiting to see what we do up here because I think we might have gone up a little too fast, and I think we have the ability to have a bit of a reset before we definitely have another shot at really breaking out and getting the next leg up. As far as support, this 44, call it 44.75-ish level is the first area I would look to hold. Then you got the 50-day, and you have a retest of this long trigger down here just below the 50-day, and you have the 20-day, which is also going to be right next to the weekly 20 SMA, which is on this chart, it's the yellow line. So there's a lot of levels of support below. But as far as my Sunday prep list goes, there are plenty of short ideas. And if this market does give me some triggers up here, I will definitely be looking to short a few names this week. It's all going to depend on the ES and the NQ, which we will get into next. So heading on over to the NQ, again, let's zoom out. Monthly chart, no different. You know, we're kind of just holding up here, and as that happens, you know, as we get into November, this monthly 20 SMA is going to creep up higher, and the downside risk really kind of diminishes. And that should be expected as things consolidate and we build a base and can go sideways a bit. That's basically telling me that the move up we've had is digesting, and we are getting ready to then make a move either higher or lower. But when we break out of a decent base, that next move usually will get some sustained follow through due to the fact that it had a long base built. We haven't built a long base yet. As you can see, we've only got about 3 weeks here of sideways action, and now we're back at highs. NQ's a little bit weaker. The tech stocks are a bit weaker right now compared to the ES, but we are still, it is still a strong push off that recent pullback to the weekly 20. Again, yes, we came under the weekly 20 SMA. That doesn't bother me one bit. It's still a pullback into it until some other things happen, and then it would be a fail of that time frame. If we zoom in one more closer, you'll see again we are seeing some sellers show up here, having a bit of a stall out. There are some things that I'll zoom into even a intraday time frame, and you'll see we recently had a short trigger. And so what I'm interested in seeing in the coming week, is do these push ups back into the underside of the 120-minute 20 stay as resistance, and we roll over and lose last week's lows? If so, I think there are a lot of tech stocks that are extended that are offering some decent setups for some shorts. And we already have the valid short trigger. You see here's your high, a pullback, a lower high, and then we break, right? And we have quite a bit of room down to the 20-day. We're retest of that psychological level of 15,000. So that's what I'll be looking for. If pushes higher stuff and we end up getting some lower highs and start to roll over again. If we, whatever, we don't have a crystal ball, if we gap down Monday morning and it comes right down into some levels of support, there'll be some long setups as well. So I have long setups as well in this Sunday prep. You'll see them here in a minute. But as always, I always make plans for all scenarios, right? And that's what you guys need to do as well. It can't just be one bias. Now, I will say this. When we make big moves up and get extended from the 20-day, I do lean towards the short bias, just like when we make big moves down and get extended under the 20-day, I get more and more long bias the lower and lower we go without having a decent bounce. That just is based on the fact that things like to trend on the 20-day. You'll notice oftentimes when a stock is in a strong trend, every dip towards the 20-day or whatever time frame you're looking at, the 20 SMA will offer support, and in a downtrend it will offer resistance. So if we get extended from it on any time frame, that becomes the target on a mean reversion for myself. So we are a bit above the 20-day on both the S&P and the NQ, the NASDAQ. And so if some short setups present themselves, there is some room to the downside. And that will stay that way if we continue higher, right? The higher we go and the further we get away from the 20-day, the more and more I start looking for those short setups. And I start to kind of hands off on any new long setups, because for me to get a long setup, I would like us to have pulled back to support. And then I'm looking for strong names to be launching off of their support as well. So that's the NQ. Let's move on to the cryptos. So here is our Bitcoin chart, which I always use for the cryptos. And again, guys, we have breached all-time highs. Yes, we've pulled back, not a big deal. That's what happens when stocks trend. Push up, pull back to support. Now, what happens next is what's important. Do we push up again and make new highs? Or do we push up and put in a lower high and then possibly have a level that we need to watch as key support on further pullbacks? But until either of those things happen, everything looks intact here. Things do definitely still look bullish. And if you'll remember 2 weeks ago when I did the last Sunday prep, I was pointing out the fact that guys don't underestimate the fact that it's nothing for a $6 stock to go to 10 or 60 cents to go to $1. But for some reason, as traders, you see 60,000 and go, $100,000 Bitcoin, that's crazy. It's not so crazy, guys. Things can get there. It's not going to happen overnight, but this is a beautiful long bullish chart, and there's no reason to be fighting this thing short. So like I've always said this, right? I only trade crypto related equities like Mara, Riot, Coin. I trade those intraday all the time, especially when Bitcoin heats up like this. You start to get the volatility and the range in those names. Yes, Mara got extended. Yes, Riot pushed right into resistance. But in the bigger picture, Bitcoin's strong. So if Bitcoin pulls back to support and some of those names start pulling back to support, there very well may be some long setups. And if you are one of those stubborn people that keeps thinking like that Bitcoin's got no value and like you're just a cynic, right? You don't believe, you're going to miss out on these great opportunities. You guys got to make sure that just be objective. This chart can go higher, and I don't see any reason why we should be bearish on it. I think all pullbacks to key support offer great setups for the equities as well. So make sure you guys keep that on watch as we head into this week. That's it for the broader market. Let's do our sector analysis. All right, coming over here to our barchart.com stock market sectors, and we'll do a short-term matrix. And a lot of green, right? We've had a big move up in the market, so that's kind of a no-brainer. Now, remember, guys, I like to not just use these numbers by themselves, but I like to look at the ETFs and see what names have pulled back to support, what names are extended, and then make plans from there, right? So it's pretty important to, let's just start with financials, okay? Financials look great, right? They had a good strong last week, a strong month, and a strong last 3 months. But when you go and look at the ETF for it, right here, we're a bit extended. So like, even though it's a strong sector with strong names, as far as I'm concerned, this may need to pull back first to some support before I really care about longing anything in this sector. So it doesn't, I'm not automatically going to have like the Capital Ones and the Morgan Stanleys and the Goldman Sachs in my Sunday prep just because financial sector's been strong. No, it doesn't work that way for me. This sector, I'll have alerts set. In fact, I'll just put one right here so you guys can see. I'll set an alert so when it pulls back to support, then I may start cycling through those names and see what has setups. But for this week's purposes, I feel like we're extended up here. Can it go higher? Of course it can. But I don't want to initiate long positions in a sector that may have a nice pullback, because I think then I'm going to miss out on the good prices, right? I'll end up taking a stop, kind of waste a bunch of mental capital when I know I should have just been patient for the pullback. So let's go back to energy. Energy's been strong. No doubt about it. It's the strongest sector in the last 3 months, in the last month, and it had a good week. Let's go look at that sector. So you have energy, which is XLE, and look, we've got a bit of a flag forming up here. It was extended for a while. I think we've gone sideways enough. I really do think that this may break, and I've really been honing in on the oil names. So if you look at XOP, I want to point out something about this chart. The bottoming pattern on this chart here was absolutely gorgeous, even if you look at it from a monthly, right? Low, push up, intermediate high, higher low, and the break of that. And so far, we've broken this long-term downtrend, and since we broke it, we've pulled back and retested it and shown the ability to hold. Not only did we hold that trend line, but we held a retest of the breakout area. So oil looks extremely bullish to me from down here. And let's go to the daily and see. Again, we have this flag, so you'll notice I have an alert set up here. If we break north of this flag, there's some oil names I'll have my eyes on. So this is what I'm talking about when I say use your tools. We don't want, you see the difference between this and then that financial sector, right? The oil and the energy names have a nice tight flag up here and may be ready to make a move, whereas financials are just kind of extended and may need a pullback. Let me check the notes real quick. I think there was another one I wanted to point out. It was, the tech sector, guys, of course. And you'll see I have an alert under it. And that's because if we break under there, as well as the levels I pointed out on the NQ, some of these names that are extended in the tech sector, I will be looking to fade. And you'll see those when we get into the actual Sunday prep ideas. But make sure you guys understand how to use both this stock sector matrix here, which is showing you just what's been strong, what's been weak, what might make a good sector to deploy capital to, what might make a good sector to be hands off or maybe even look short, and then compare it with the ETFs as well, so you just get a good feel for what sectors are ready for moves and what sectors may need to have pullbacks or at least some sideways action. So that's the sector analysis, and we'll get right into the ideas now. All right, we always start with our long ideas, and the first section of the longs is strong stocks looking for continuation. First name on my list this week is OLN, and you'll notice I have a bunch of fibs on here. And why? Well, I like to just see if there's something that constantly just seems to repeat itself. This stock loves to make little moves up and have nice little 50 to 61.8% retraces before it has another leg. Well, as of Friday, we broke out of the base. Nice long base that's formed since looks like June. So you got what, 6 months of kind of sideways action, 5-6 months of sideways action, and then a breakout on strong volume, earnings related, and we've seen the ability of this to have pullbacks to support and then go. So what I'm looking for is that to repeat. It doesn't have to happen Monday or Tuesday. This might be something that happens mid to late week, or might even be next week. I don't know, but I want to be prepared. So the levels I'm looking for, a 50% retrace is going to put us right into this pocket, which is the breakout area. And I love to see breakouts be retested, see if buyers are still there. If they show up and we start making some higher lows and I have a way to set risk, I want to get in there and put something on. The other spot would be just a bit lower, which is this 61.8% retrace. And I believe if we turn the pivots on, there's a monthly in there, right? Yeah, so the monthly pivot's at 52. So I really like that little pocket there. Let's just call it 51.5 to 52. And I feel like any kind of retrace down to that level, I'm going to be watching for the buyers to show up. That is the idea for OLN. So the next idea on the long stocks is BROS, B-R-O-S. It's a recent IPO. It's been very strong. I love the range on this name. I got this thing covered up here. It's $6 ATR right now. Nice big break on Friday, a strong candle. I am going to go into this 120-minute time frame here so you guys can see dips to the 120-minute 20 have been holding and giving nice entries for the next leg up. It perfectly lines up with next week's weekly pivot, which obviously isn't there yet because these charting platforms won't do the calculations till the Monday price action. But I calculated it for you guys. 63.80 is going to be the weekly pivot, and by the time we open up on Monday, this 120-minute 20 should be right in that area as well. So what I'm looking for is early weakness, a flush right down to just around 64, maybe a little bit lower, and watch for the buyers to step in for a long on BROS. That's the idea there, B-R-O-S. The next idea is ASO. ASO. Yeah, Goose is going to chuckle when he sees that I had this one on prep this week. He actually had it on his midweek watch. It was either last week or the week before. I think it was 2 weeks ago. And it's been behaving very well. You can see a clear trend here. Every dip has got buyers, higher lows. There's two spots I'm looking for. Either a flush down to this 42 area where you have the monthly and you also have some recent highs you got here and here. So I want to see that prior resistance turn into support on a retest. If it's not going to hold, I got no problem stopping out, but I will 100% be super interested if we come down to this 40 area where you're going to have the weekly 20 as well as the quarterly pivot. The other thing to note, guys, is I wouldn't be caught dead long this stock if we get under the low of this candle here, which is 38.70, because that's just a big short trigger. And if we lose 38.70, I feel like this thing could easily come down here and test the 200-day, and I don't want to be around for that. So I'm just making sure you guys understand where to set risk at. That's like the oh shit, jump off the boat stop loss. I don't think I would even take it down quite that far. If I were to get a 40 entry, I'd probably be using one of these lows here as where I'm risking against. I'd prefer it to flush down and wait for some higher lows to set in so I can have set risk on even an intraday basis, not having to use like the daily chart as things to risk against. Again, I will be in there before 40 though. I like that 42 area. I'll pull back to that and the buyers show up and I will look to get long ASO. That one's for you, Goose. All right, so the next two, PSX and PXD are both oil names, right? And like I said, if oil gets that break above that flag, and you'll notice, look at both these names have a flag as well, and I've got alerts set up there. So these aren't the types where I'm looking for buying weakness. I'm actually going to wait for the energy sector and the oil sector to push and break above that flag, and then I'll be looking to buy dips. So I have alerts set on both these names over the flags, and then I want to buy dips and look for higher lows and try to join trend on them. Which one was it? Let's see. PSX. It's PSX reports Friday before the bell. So, this is not something where I would carry any position into the earnings numbers. But again, I feel like this is going to be an earlier in the week type trade. It's both, and it's the same idea. That's why I'm kind of just grouping them together. PSX and PXD. PXD has been the stronger of them. And if you, let's zoom out, take these pivots off. Because I've had this on our watch in prior Sunday preps, right? So we are right up here into this longer, higher time frame trend line, but we're flagging out up here, right? And so if we break over it, we may get some extension. And I think if you look at the high from here, we're right up in that 210 to 213 area. I feel like this could go test that. And if we're gonna make a move from the 190s up to 213, you better believe yourself, I want a piece of that. So both these names are on my list. I've got the alerts set on XOP and XLE, which are your energy and oil ETFs. And I have alerts set on both these names respectively as well. That's those ideas. That's it for the strong stocks looking for continuation. I'm gonna move on over to the oversold reversion setups now. All right, guys, so moving on to our oversold reversions. The first name on my list is PayPal. I'll start with the daily time frame, guys, and you can see I have it clearly marked on the chart. The weekly 20 is right down there around 220. That's where I want price to come to. Not sure we get it or not, but that is the spot for me where if we were to work our way down there, I'm definitely going to be a buyer. There's going to be probably a day trade in there as well as a swing long that I will be starting around that level. But I do want to point out what this stemmed from. This was a big short trigger on the weekly time frame. You see the high, the low, the lower high, and then the break of that really sent us tumbling, and we were extended on what time frame? The monthly. So why do I want I'm sorry, it wasn't the weekly 20 down there. It's the monthly 20 down there at 220. Why do I want 220? Because with that short setup, that's the target, the monthly 20. That's the time frame we were extended on. So when we do a mean reversion, it makes logical objective sense that the price will revert back to the next time frames up trend, which I always point out that stocks love to trend on 20 SMAs, whatever time frame it may be. So we lost the weekly, next time frame ups the monthly. That's where I want to be a buyer on this name. So that's a PayPal idea. I want to be looking for 220s if we can get down there for scoops. It's quite a bit of ways. Like I said, I don't know if we get there, but that's definitely a spot of interest for me on PayPal. And the next idea on this list is Snapchat, SNAP. And again, same thing, right? Where do I want this? I want this at the monthly 20 SMA. And this was obviously a really big sell-off on earnings. 26 ended the day down 26%. That's huge for a large cap that's been a strong name too, right? This has been a very strong name. To see it sell off like this, very, very surprising. Again, just like PayPal, do I think we get this level? I don't know. I don't have a crystal ball. And I actually wanted to make a note too. If we don't get those levels that I want, that doesn't mean I'll miss the trade. If there are intraday signs of a reversal happening, meaning some higher lows and then possibly triggering with a higher high, I will look to buy dips and join trend if that's going to be it. Because when either of these names turn, there's going to be big bounces in them. So I don't want to miss. So just because I don't get my price doesn't mean that Ricky doesn't get the share in the spoils. You better believe I'll be in there if they start showing that they're turning ahead of my area. But I do want to point out that both of these stem from the same thing, right? high, low, lower high, trigger. And look what, extended from the monthly 20. So this has room to come in. I want to make sure I'm patient and we give it the ability to come down there. But again, I ain't gonna miss this if it sets up ahead of that. So those are the two names on my oversold reversion setups. That's it for the longs. Let's move on to the short setups. All right, let me pull up that list. Weak stocks, looking for continuation. First name on this list this week is FUTU. Let me get off this monthly chart. I'll go to a daily, throw some pivots on here, and I'll show you the idea here. Basically, I have two spots I'm looking for on this name. First is gonna be a pop. Let me zoom in a little. A pop up into this 78 area, which is the annual pivot. It's also the high of where that gap down happened. Again, if we pop up there and I get short and it doesn't want to be, that's not it, we're going higher, I have zero problem stopping out, and I have another spot I want to re-enter, and that's going to be the 20-day right up there by that monthly. So it's going to be 80.5 to 81, somewhere in that range. Which would also be a gap fill and just a retest of where, there's probably a lot of longs trapped up there from the big gap down. So that's the idea on FUTU. I do think there's a short in this name if we can push a bit higher first. Next idea on this list is Honeywell, HON. And so this name was in play off of earnings, where they basically put out there that they're going to have worse than expected revenues due to the supply chain disruption. So I think there's some more downside. I think this is a pretty nasty sell-off, and if we go and look at some of the intraday action, you can see where I like this. I like anywhere between this 219, which is the monthly, and 220.5, which is the quarterly. This is a range type play. I would be using this area, not like any set number, but any pop back into this area, I'll be looking to get short with risk over the high right here where this push up stuff. So basically 222 is kind of my level of risk. So you have to size accordingly, right? But I feel like this does have some downside left in it due to that, what they talked about on their earnings report. The supply chain issue, I don't see it getting solved anytime soon. And I feel like there's a lot of people just kind of stuck up in this area. Can see that it's had quite a bit of a price history, right? So this 220 to 219 to 220.5 area, that's the range where I would like to be short on a pop and then have set risk over that 222. Next idea is LYFT. Let's go back to the daily chart. And the idea here is a pop back up into the 20-day. I don't think this happens early in the week. It's going to be something that I think takes a few days, but I'm looking for a move back up into the 20-day where this breakdown occurred to be a short opportunity. I feel like a pop back up into there will find some sellers, so I'm kind of using that 5250 area as the area I want. Again, I think it's going to be something later in the week, but keeping my eyes on it, I want to make sure I don't miss it. All right, that's it for the weak stocks looking for continuation. We're moving on to our last section, which is overbought reversion setups. And so the first name on my list this week is APO, and as you can see, we're getting a bit extended. I love the look here. The volume's coming in, so it's more liquid than it typically is. It's got good range, $2.33 currently. And as you can see, what do I always say I use to gauge how extended something is? How far are we from the 20 SMA? We are quite a bit of ways from it. This is definitely going to have a decent pullback at some point, but I'm not here to guess tops. I would love for this thing to gap up and get an extension to give it that more A+ extreme look. So, hopefully we can open up above 80 and get a push right off the open. And then I'm looking for lower highs in some way to set risk. But I think that this is setting up for what I was pointing out, guys, is the broader market, right? If the ES and the NQ does find some resistance up here and we start to roll over, these names in this section are going to be probably my focus. Anything that's extended right now and the market is kind of extended, if the market rolls over, a lot of these names might offer very good downside and very, very obvious levels of risk. So APO. Next idea on this list is CNI. Exact same idea. The difference here is that you can see this gap up day kind of had a pullback and the buyers showed up. So it already did a little retest of the recent breakout area. But again, I don't think this one's ready yet. I'd like to see it gap up and push. I'm looking for anything up into this 140 to 143 area, looking for the sellers to show up, see some lower highs, and have something to risk against. Again, I'm not here to guess tops, guys. That's a fool's errand. So any big pushes where we get extension, I'll be looking for these as good short opportunities. That's CNI. Next is AMD. Again, we're extended from the 20-day. This is obviously a strong name in the tech sector, but we're pushing straight up into recent highs, right? Obviously over these levels, and we're breaking out to new all-time highs. This is going to be very, very dependent on what the market does. So make sure you got your alert set on levels on the NQ, levels on XLK, because they're going to offer the clues. If they roll over, this is going to probably come in with it. Now, another thing to keep in mind is always pay attention to relative strength and relative weakness. If the market rolls over and this thing is staying relatively strong, I'm going to be a bit cautious, right? Because if the market looks heavy and then finds that 1030 turn and ends up going higher, something like this, if it's has relative strength, might end up really getting me some paper cuts in the process, and I don't need that. But on the other hand, if it's got relative weakness, like if this starts to come in and the market's not really rolled over yet, and then the market rolls over, I'm going to be very interested in this name. So AMD, guys, keeping that one on watch this week. And the last name on the prep this week is Home Depot. Again, looking for 372 to 375, shove up there, and the markets start to roll over. I'm going to be looking towards this as a possible short target, and may come in with the market. LOW can be played the exact same way with the same idea. I just thought that it would be pointless to put both names in the Sunday prep, but I will have both on watch, guys. Both of them have the same look. They move together. Obviously, they're like very similar companies, right? They're peers. So 372 to 375, you got your quarterly and your monthly. If we shove hard up there and we start to see lower highs, I will be getting short with set risk. And if the market rolls over, I think these names can come in. So that's it on the shorts and the longs. That's the Sunday prep. Hopefully you guys found value in this. Remember, the idea here is not for you to copy my trades, but to see the ideas and see if you see the same thing in them and then create your own plan. Remember, risk management first, capital preservation is the first and most important thing we must all do. Always wear your risk manager hat. Think about gains as just a byproduct of the process being done correctly in a repetitive manner. Put on risk when there's A+ setups. Let the process play out. Manage risk. See you guys Monday at the market. Let's get ready to crush it. Peace.